We have had TSMC out with numbers overnight, reporting first quarter profits that beat estimates. A couple of customers kind of slightly scrambling to stockpile advanced chips in the United States ahead of the tariff war. Has that created a little bit of pull forward? Let's find out. Bloomberg intelligence analyst Matt Bloxham joining us around the table. Is that how I should read this? Slightly better than anticipated, probably because of tariffs, but actually net fairly good.
Yeah, I think, it's encouraging the message they're giving about, this doubling in AI chip demand, that underneath everything structurally, the AI story is still there. I think a lot of this may well be tempered by the uncertainties that around what's going to happen with tariffs. They've kind of put an outlook out there based on what they see today, but obviously the world could change, as we know, tomorrow quite significantly, and obviously they're massively exposed to tariffs. We're waiting for Trump to come out with specific tariffs on chips and smartphones, so that there could be a sudden break on demand for some of these things into the second half. So they're all the right things, everything they can do to kind of prepare for this. But as I said, the outlook could change.
So TSMC kind of coming in, as you say, better than expected. That is not the messaging we got from ASML yesterday. Can you connect those dots for us?
Yeah, I mean, actually, when you kind of drilled into, like, say, the ASML order number was lower than people expected, but actually the commentary from ASML was that, orders are very lumpy, don't read too much into that. They're actually quite consistent with TSMC saying that underneath everything, the demand is kind of robust. They're not seeing any material changes. I think one of the things that doesn't quite connect from TSMC today is what we heard from NVIDIA about, the H20 chip constraints and the $5.5 billion write down they're going to have to book against that. That ultimately, will kind of flow through to slower demand for TSMC. Now, TSMC said that they've kind of taken all this into account in the guidance they've given, but these kind of shocks to the system, potentially going to keep people a bit cautious, I think, about getting too optimistic.
Yeah, and we saw NVIDIA. I mean, it was only down 1% actually by the close yesterday. On the back of that $5.5 billion hit from these new China curbs from the US administration, the H20 as you referenced. Now we've had some more time to look into that, is there a sense that there's more write-down to come on that front? Because a lot of people were trying to join dots saying, wasn't this chip made only for China? And hasn't it the potential to sell a lot more than 5 billion? So how big is the hit, I suppose, is the question.
Yeah, and I think people are still kind of trying to figure that question out. As that could be just a bargaining chip that the US administration's using in the negotiations with China. It may not, so it's hard to say. But I think people will be I'd say just cautious that there could well be further negative shocks coming in the future, in the coming months. Whether it's more things like the H20 chip, or whether it's like constraints on chips for smartphones, which kind of tempers demand for smartphones. So there's lots of moving parts here that going to take a while to settle.
What do you think's happening? I'm really curious about guidance. There was this temptation, I suspect, for many CFOs, CEOs coming into this reporting season to abandon guidance. We don't know. There's too many things going on. We have no idea what's. A lot of companies seem to be sticking with guidance, but adding a line. This is related to current information.
Yes.
How solid do you think guidance is at the moment within the chip sector, within the tech space?
Not very.
Right.
And, we've also seen this with, like, a lot of the ad agencies, too, that, Omnicom cut the bottom end of their guidance, but Publicis, for example, maintained their guidance range. And, again, it's like you said, it's based on what we know about the kind of current economic situation and some anticipation there might be a bit of weakness into the second half. But, as I said, that could all change overnight. And, I think it's a responsible position for companies to take. They don't know what's going to happen, so on their best knowledge about the situation today, they're kind of sitting with their view, and it may well be that we through a period of volatility we come out and actually there's no recession, that there are no tariffs, or the tariff situation ends up being a kind of relatively minor thing, and that actually we're kind of where people thought we were coming into 2025. So I think
but the risk is to the down. Presumably the risk is to the downside in all of this.
The risk is to the downside for sure. Yeah.